So you may have seen a lot of stuff in the news recently about interest-only mortgages, but do you understand what they are and why they're coming back into fashion? With lenders like Nationwide and Gen expanding their interest-only options and criteria, it's time to demystify this slightly old school but surprisingly flexible option. So what is an interest-only mortgage? Well, for one, the clue's in the name. You only pay the interest each month. You are not paying down the capital on the loan. And that means that your monthly payments are going to be lower, but you're not biting into the capital. You're not reducing the loan amount each month. And at the end of the term, you still owe the full balance. So you're going to need a repayment strategy. And that could be investments, savings, downsizing, or even pension lump sums. Now, these kinds of mortgages used to be a lot more common pre-2008. But after the financial crisis, lenders tightened up the criteria and made it a lot harder to get them. But we're currently seeing interest only coming back to the market. And what's really interesting is what we call a part and part mortgage. So this is a hybrid option. Part of your mortgage is interest only, part of it's repayment. So to give you a really good example of a part and part mortgage, you could look at taking out a £250,000 loan and take £150,000 of that on capital repayment and £100,000 on interest only. And this could work to extend your affordability, keep your monthly payments down, and you'd still be chipping away at some of the capital. But at the end of the loan, you would still owe 100k. This can be really popular with people that have got savings or investments or are planning to downsize at the end of the term, but still want to be chipping away at that balance. So we've recently seen Nationwide increasing their interest-only criteria. And this is making it a lot easier for borrowers to access interest-only mortgages if they're higher earners and they've got really solid equity in their properties. And Gen has been offering flexible part and interest-only setups. And these are especially aimed at people with variable incomes or affordability constraints. And it really shows a growing demand for flexibility in the marketplace, especially from self-employed borrowers and those nearing retirement. So who are these mortgages good for? Who are they really aimed at? Well, it's generally for homeowners with really good, strong equity, so 50% loan to value or better. You've got to have a clear plan for how you're going to repay it at the end. You've got to have that exit strategy. And that can be investments, savings, pension lump sums, or the sale of the property. And it works well for people that are self-employed or with variable incomes where they need to keep those monthly payments down. But if you don't have a credible repayment strategy, you are going to get a nasty surprise in about 25 years' time. So interest only isn't new, it's not a magic trick. And at the end of the term, you still owe the full sum. But in the right circumstances and for the right person, it can be a really valuable tool. If you're thinking that a part and part or an interest only might be the way you want to go, then make sure you talk to a broker. They can make sure that it's going to fit your situation properly and that your exit strategy actually stacks up. I'm Patrick Waitman, your local East Midlands mortgage and protection advisor. Drop me a like or follow. And if you've got any questions, drop it in the comments below or check out my links in my bio. Speak to you soon.